Good morning. This is Larry McMillan with the stock market update on Monday, June 24th. So the S&P 500 index made a new intraday all-time high last Tuesday, which was just 3 trading days ago, and made a new closing high on Thursday, which was 2 trading days ago. So that chart remains positive, and therefore we are still maintaining a core bullish position. There's support at 5,400. Then below that at 53.30-ish to 53.50 in that area, and then 52.60. A close below 52.60 would be negative, and that would be a cause for concern. The equity-only put-call ratios have lifted off the bottom of their charts by just a little bit. So the computer analysis programs that we use to analyze those charts are calling for sell signals. However, I prefer to see the visual evidence, and I'd like to see these ratios rise sharply in order to actually use them as sell signals. Otherwise, they're just sort of in an overbought state wandering around near the lows on their charts. Breadth has been, well, not great. It's just been okay. So the breadth oscillators are clinging to buy signals, but they haven't rolled over to sell signals. They haven't stopped out those buy signals. So it's sufficient, but it's certainly not what you'd really like to see with S&P making new all-time highs. Meanwhile, cumulative volume breadth, which is something we talk about occasionally, is also not making new highs, and it last made its last all-time high on May 20th. Since then, S&P has made a new all-time high on 8 different trading days. So this is a negative divergence. It's not a sell signal per se, but it is a wake-up call, an alert to pay attention if sell signals do arise. Now, we're looking at a potential McMillan volatility band sell signal, but that still hasn't developed yet, so we'll keep you posted on that on a weekly basis. New highs versus new lows is in a neutral state right now. One day new highs will lead new lows, then the next day the opposite occurs. So not really much going on there. And that indicator, which had been long bullish for quite some time, is now in a neutral state. VIX remains at a very low level, and as long as that's the case, it's okay for stocks. The trend of VIX buy signal is still in place. That's a buy signal for stocks. And unless VIX closes above its 200-day moving average, which is currently at 1450, then there's really not a problem here. And finally, the construct of volatility derivatives, which is the term structure slope of the VIX futures, that remains positive as well. So all in all, we're maintaining our core bullish position. We will trade other positions around that if and when they are confirmed. I invite you to visit our website. We'll be having some specials coming up here around the 4th of July. And meanwhile, have a great week trading.